All right. Can you see my screen?
Yeah, yeah, I can.
All right. So basically, um, hold on. So basically, this is how I go from higher time frames to lower time frames and like analysis in general. So let's say you just entered a pair. You entered a pair. You don't know the current direction or you don't know the correct direction if you're an uptrend or downtrend. Sometimes one can identify it by just looking. That's let's say you entered and you see series of higher highs, higher lows, higher lows, higher highs, higher lows, higher highs, higher lows. Of course, it won't be this clean, but you understand what I'm saying. You just see series of higher highs and higher lows like this, and then you just assume that okay, this is an uptrend. Or let's say you entered and you spot something like this, lower high, lower low, lower high, lower low, lower high, lower low, like that. So you can just enter the pair and assume that okay, we are in a downtrend. We'll continue to be in an uptrend in as much as we keep having lower highs and lower lows until we break a previous high. This is what I mean. If you say we're in an uptrend, we'll keep being in an uptrend. For us to even call it an uptrend, for can you hear me?
Yeah, I can hear you. I can hear you.
So series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. The reason why we are still in an uptrend is because every higher low, every previous low, every low here is higher than the previous low. Every high here is higher than the previous high. So that's why it's called higher high, higher high, higher high, higher high, higher high, higher than the previous high, higher low, higher than the previous low. So we'll continue to be in an uptrend. The only reason I just explained the only reason why it's called an uptrend is because of this series of higher highs and highs. So we keep being an uptrend until we have something like this. So this is what we call change of character. Others call it momentum structure shift. Whatsoever name you use to identify it, it just means that price is about to change the current trend. So when uptrend, you know that price is about to change to downtrend. When downtrend, you know price is about to change to an uptrend. So basically, it's just a signal. I always say it. Change of character doesn't mean we've actually changed trend. Because sometimes price can change this, can change character and continue. So they call it fake change of character. But I don't call it that because on a normal day, change of character is supposed to be a signal. It's supposed to just be a signal, not. I'm trying to. I'm trying to put all this together. So it's supposed to be just a signal that price is about to change from a previous trend to a new trend. So so after that, at the back of your mind that it is just um hold on, that it is just a signal that we're about to change current trend. So after here, we'll just wait for confirmation. So confirmation sometimes the risky one and the okay, let me not even say risky one. After a change of character, actually, we'll have a breaker block here, alright? We'll have a fair value gap here, and we'll have other block. Keep it in mind that this is higher time frame. When I say higher time frame, is any time frame from 2 hour, 4 hour, 8 hour, daily, weekly. That's a time frame. So it depends on the type of entries you take, that you use the minutes that you be taking your entries from. Personally, I take entries from the 30 minutes and 15 minutes time frame. So the whole point here is, after that change of character, you wait for price to mitigate either the breaker block here, the fair value gap here, or the other block. So the one I use is the fair value gap, and this is the reason behind it. Sometimes price will react on this first, on this breaker block first, take out the next low, and then still come for the fair value gap. So fair value gap is like in between, and then your invalidation can cover all the way up here. Invalidation is always around here. Okay, let me just draw it. So invalidation, if let's say this is a fair value gap here, your invalidation of that fair value gap will always cover all the way around here, and invalidation of other block too is always somewhere around here. So FVG is just like one of the best choice, because first off is in the middle of both points of interest, this breaker block and this other block. For breaker block, you might be too early, like you might enter too early and then price will take you out for the fair value gap. For other block, you might be you might have a missed entry, you might risk mixed entry, because price might react from the fair value gap and just play out. So that's why I go for fair value gaps, because it can still get all the way here, it can get all the way here, and it's still not invalidated and still play out. So normally by now you know where stop loss is for fair value gaps, right? Where you put your stop loss for fair value gaps.
Yeah,
Can
yeah, I
you hear
do.
me?
Yeah, I do. Yes. Yeah.
All right. So on a normal day that will be our invalidation. So this is how it
Mm.
is done. So on this mitigation, you wait for confirmation. You don't enter straight up. If you enter straight up, let's say you are ready to risk whatever is here, because sometimes price can still take the next high. So don't forget, this is just a signal. You are not supposed to start selling immediately. So I'll wait for confirmation. So the confirmation will be a lower time frame break of structure, either a 30 minute or 15 minutes or 1 hour. So while this is forming, you would have had like a bearish engulfing candle. You understand? So on this break of structure, you use the other fair value gap here once again. Sometimes it reacts from the this thing, but sometimes they overlap. This mitigation block or breaker block it always appears like either a mitigation block or breaker block. It will overlap with the fair value gap here. So you enter here, either you use this next corresponding low as your TP, or you use this trend line liquidity all the way up here. That's for a bigger risk to reward. But you just won't forget to keep booking partials as time goes on. So um hold on. Are you still seeing my screen?
Not yet. Not yet.
Wait, what do you mean by not yet? You've not been seeing my screen.
Oh no! I mean, no, no, no. I've been seeing your screen. Like, I'm not seeing it right now. No, I've been seeing it.
Okay, okay. How about now?
Okay, I can see it now. Yeah.
All right. So that's how we'll go from, like, for now, this is how we can go for when it comes to change of character. So another scenario, I'll still show this on the chart. But another scenario is if you are actually on that current trend. So let's say this is like the 4 hour trend, and we've been buying. So of course we'll look for buying opportunities. So on a normal day, this doesn't just go this smooth. It always looks like something like this. So let's say we mitigated fair value gap. Yeah. So on mitigation, you wait for a break of structure. Hold on. To just be more realistic. So let's say we have series of higher highs and higher lows. So let me just be a little bit realistic. So it doesn't really go that smooth. So it can do something like this. So this is 4 hour. Let's say this. Let's assume this is a 4 hour time frame. So this is a 4 hour fair value gap. Of course, you can enter straight up from what you would have learned from the video. You can enter immediately, but it is safer and better for better risk to reward to enter on confirmation. So you wait for this 30 minutes. This thing you literally say it's either use 1 hour or 30 minutes or 15 minutes. So you can see we're on 4 hour, but immediately we mitigated, right? Immediately we mitigated, you go down to 30 minutes time frame. The 30 minutes is always best, but sometimes if it doesn't appear on the 30 minutes, it can appear on the 15 minutes. So you enter. It is stronger if it overlaps with a breaker block, but if it's just a fair value gap, you are still good to go. So your entry will be here. It is advisable to now use surface, but you can still use 50%, but it's advisable to actually use the surface so you won't miss the entry. You know, you've used 50% here already, so it's advisable to just use surface. So you use surface. Oh dear. So you use surface, and your SL will be somewhere around here. It is a must. You don't have to refine this one again. So just put the stop loss the proper way, and then to the next corresponding I. Next corresponding I. Yeah. It's because I've not drawn most of the eyes, but just like next liquidity or next I can be somewhere. It's always around average of 1:3 or 1:4. So that's how you go from that particular higher time frame to this lower time frame. So wait for mitigation and for price to play out. So it is while it is playing out that you can now look for continuation entries. You might have another you can have this mitigation block. So you set another entry, and then I'll stay when we are getting deeper. I'll show you how I take continuation entries. So you can have another entry there. That's how I take most of my entries actually. So you have another entry there, and then you just try to take it again till you get to that high. You have to actually wait for reversals before you try to do stuff like this. If price is not reversing or pulling back, let me just say pull back. If price doesn't is not pulling back, there's no point. There's no point trying to like mark other entries. Just wait for the initial one to play out. So that's another scenario. The first scenario was if it was a change of character and we change trend. So this one is current trend, so we don't it's not a change of character. Now one thing you realize if you've been following up or from this to the difference is when it comes to this 4 hour, what did I say? I said you can enter immediately. You can literally enter. If it's a 2 hour fair value gap or 4 hour fair value gap, you can enter. Why? Because we've been bullish and we are looking for bullish opportunities. So of course this is valid because it's a buy opportunity. It is only when we just change character, put it at the back of your mind, when we just change character, you can't enter immediately. You will need that confirmation. In fact, some people not enter on change of character until they have like double break of structure to that current new trend. I don't know if you understand. If you have it like this, okay, let me do uptrend this time, uptrend to downtrend. So let's say we've been bullish. No, let me do downtrend to uptrend. So let's say we've been bearish, and then we change character. Some people will not enter until price does something like this. They don't care to miss all the moves. They just want to be sure that you're actually in an uptrend. So change of character is just a signal. That's one thing most people used to miss. It's just a signal. It doesn't necessarily mean you've changed trend. For you to say you've changed trend, you have to have series of higher highs and higher lows for an uptrend, or lower highs and lower lows for a downtrend. So currently, you don't enter immediately. If you enter, you are risking it that okay, price might still continue the current trend, but you're just risking it because maybe you don't want to miss one of your entries. Like currently on gold, we only took out a liquidity on the 30 minutes. We took out this we took out this liquidity, this I here, and then we changed character on the 30 minutes. So we mitigated another block. Of course, this is not really practical. It doesn't happen many times, but we've taken a lot of higher time frames, like all time high, all time high, all time high. So at some point you have to realize that we might start selling. So after 30 minutes, after this reconstruction, I had an entry here, but I lost it because my stop loss was very tight. The funny part was immediately this stop loss was taken out, it started selling. So I looked for, this is now a double break of structure. This is the first one and this is the second one. So this is the second break of structure. This is a mitigation block. The mitigation block coincidentally was overlapping with a 30-minute fair value gap. 50% of that 30-minute fair value gap. Watch this. So watch this. You can see the 50% is literally on the same line. So that was entry. On a normal day, this is not feasible. We might still continue the uptrend because currently we have like two fair value gaps now. We have 1 year. Of course, this one will be looks like it will be taken out. It doesn't look valid anymore. So this is already getting taken out. So this might still play out. So on a normal day, you either use the next low year or the next potential buy. For this kind of entry, you just use the next potential buy because you know that we are still bullish. So currently on the 2 hour, or let me say on the 1 hour, we had a proper change of character, which is this. So price can still reverse to maybe come for I'm not sure if this is still feasible, but price can still come around here just to play out, or somewhere around here, pull back somewhere around here. So currently I'm not on this trade. I caught it late. It was running around I think 1 hour or so before I saw it. But after I've been stopped out. I really wanted to catch the loss, the sell. So fear of missing out made me enter early and made me use the wrong stop loss. But my whole point is this is why you need confirmation. You see the second confirmation was what is playing out. So you need that confirmation to actually enter trades like this. So that's the point I'm trying to make here. If it's the current trend, you don't need confirmation. You can enter because you are bullish, right? We are bullish. Let's say we are bullish. We don't need to go back and forth. We are looking for buying opportunities and we see buying opportunities, so we just enter. But if you just change character, you will need confirmation. I hope I'm not rushing things. Are you getting what I'm saying at all?
Yeah, I'm guessing it. I'm guessing it. But that I just have some questions. Yeah.
All right, go
So
ahead.
like your the okay. So what particular time frame do you use? Like, is it like you start from 4 hours, right? Or you just anyone that fits your?
Actually, I used to say that whatever you want, if you're a day trader, especially if you trade from the 1 hour, uh, if you trade from, sorry, if you trade from 1 hour, uh, 30 minutes, so on and so forth, the 4 hour is everything you can see. I used to say you don't need to go to the daily. Of course, you can go to the daily to check for maybe daily bearish engulfing candle or daily bullish engulfing candle or daily fair value gaps, good and fine. But when it comes to your time frame trend, you will see it on the 4 hour. Everything you want to see, the current trend, current mitigation, everything is on the 4 hour. So I personally I start from the 4 hour, but I can use daily to like check for daily fair value gap, like daily point of interest. Know the daily mitigation. On daily you can realize that okay, we just mitigated a daily order block or a daily mitigation blocks, stuff like that. You can also check current trend on daily also. But my point is on the 4 hour you can literally see everything you are looking for. So I start from the 4 hour because I'm a day trader that takes trade from the 30 minutes, 15-minute time frame. So yeah, do you
Yeah,
get that?
thank you. Yeah, I guess.
Yeah. So okay, this is a good example. Of course, we've been bullish for a while now on this thing on good. So on the 2 hour, this is what it looks like. On the 4 hour, this is what it looks like. So as you can see on this 4 hour, we had this mitigation block. Hold on. We have this mitigation block. So just one candle can be your pullback to mitigation block, just like this. This is what it looks like. This is when you can call it. As of now, you can call okay, it's actually a breaker block. So as of now, you can call it a breaker block, but this is what it will look like on the 4 hour. You will have to mark it all the way down here. So your entry will be here, and your stop loss will be here. But you see how big? Oh, this is BTC. Sorry, I was saying good. So your stop loss will be below here. So TP might be somewhere around this I. So the whole point is you can see how big this is. This is a big stop loss. The risk to reward is not really favorable. So from here now I know that we are bullish, right? Of course we have series of higher highs and higher lows. So I know we are bullish. So what would I just do? I go to 2 hour to check if I can see any other POI. So on 2 hour I will have a bullish fair value gap also and a bullish breaker block. But the breaker block becomes smaller from here. So I'll adjust it, make it smaller that way. Now go to 1 hour also. So on 1 hour is getting clearer. On 1 hour we had the breaker block is kind of the same with the 30 minutes with the what's it called 2 hour, and it's overlapping a 1 hour fair value gap. So you can still go all the way down to 30 minutes. So on the 30 minutes it is actually now way smaller. Let me just put it that way. It is way smaller. The fair value gap also is favorable. So you can take your entry from here. Stop loss will be a little bit here from the other block of the fair value gap or below for the breaker block. So same TP. Now it has gone from the when it was on 4 hour, it was how many RR? It was 1:3, 3 RR, but now it's 8 RR. So that's the whole point. So we have our mitigation, and then you can just try to catch confirmations from there. But yeah, this is how I go from that higher time frame, from that 4 hour, from what I was explaining. You see now, even though I entered on confirmation, I could have entered on that 4 hour, but it would just be a bad risk to reward. The risk to reward would just be theory. It's actually fair enough. It's not bad, but the point is you can just go for a better risk to reward by going to the lower time frame. So yeah, that's how it works. So on continuation, these most continuations are taken from the 30 minutes actually, but 1 hour to do does a good work when it comes to confirmation. So use look at the 1 hour this thing here. 1 hour fair value gap. That's a continuation. So you can use 50% for that because it's a little bit big. So you mitigate and it actually mitigated another this thing here. But on a normal day, this is where your TP is supposed to be. Next corresponding I. So if you put it here, that means you are either you take passengers from here, set B, allow the restaurant. So even if you eat B, um, you won't be in losses. So from here, the job for this particular continuation is done. The job for this one is not done. This initial one is not done. But for this continuation is done. So that's how it is. I think these are the couple of so that's how I go from the 4 hour to the uh 30 minutes to 1 hour. So I don't really need to go to daily time frame. Of course, you can start from daily, but you can't be marking POIs on the daily. The POIs to trade like entry setup. You can't mark it on the daily. You can mark it on the 4 hour if you have a good capital, but it's better to go all the way down to all these time frames like 30 minutes just for a better risk story. So did you get that?
Yeah, thank you. Yeah, that was clear. Yeah.
All right. So let me touch one or two again. I'm looking for one that is actually a change of character instead of continuation. All right. So this is a good example. We've been bearish. I think I used this to make a video or something. We've been bearish, and if you check the 4 hour, this is what it looks like. So
I'm sorry,
you
sorry,
can
sorry. Is there
either
a way we can record or something? Maybe.
yeah, it's recorded, it's recorded.
Okay, thank you.
So we had this thing here, 4 hour fair value gap. Yeah, right. We have a 4 hour fair value gap. Yeah, but we had a mitigation block also. Had a mitigation block also. So on the change of character, this is the change of character on the 4 hour. You can see, right? So on the change of character, I'm using the mitigation block, 50% of the mitigation block as the next mitigation, but I'm not entering immediately. I'm not entering immediately because we just changed character. We've been bearish, you see? We've been bearish, but we just changed character. So I'll wait for mitigation. So on mitigation, then you go to 2 hour, or from 2 hour you go to 30 and 1 hour. From 1 hour you go to 30 minutes just to look for a good entry. So in as much as you have what's it called, fair value gap on that 30 minutes, you can wait for price to come back there. You can see the extra break of structure on the 30 minutes. So wait for price to return there. But this one, price didn't return. Price took the next high. So on taking the next high, this is missed already. And that was what I signified there. So this entry, this fair value gap was missed. But that doesn't mean we can't catch other continuation entries. So I think this was a 1 hour fair value gap, if I'm right. Or was it 2 hour? Yes. It was a 2 hour fair value gap. So it would have been a missed entry that would have continued to the upside, but I was able to catch the 2 hour fair value gap. So you can see 2 hour fair value gap is actually a good can be a good risk to reward, good for good can be a good risk to reward for fair value gaps also. So we then add the mitigation and then continuing the trend. So this is a scenario of a change of character, not continuation. So these ones are just what is it called? These ones are just continuation entries. So yeah, that's another scenario. That's me trying to mark it on the chart, so you get it. At the end of the day, the higher time frame I is what you use. You can use this, which is the next I. You can use this, but for your higher time frame, that's if you're on the 4 hour, you will see where your last I has been. The last external I has been. So you can just use it as TP. So you can see where the last external I was. So use it as TP and that's it. So do you get that?
Yeah, yeah, I got that.
So any questions? I want you to be familiar with how I teach, how I mark out. Is why I sent the videos on fair value gap. So you are catching up, right?
Yeah, yeah, it's clear. It's getting clear.
All right. So now that I've shown you this on the charts going from higher time frame to lower time frame and so on. So I want you to practice it. I want you to practice it on the charts. You can use any pair you want, but I'll just or BTC. So you mark it
Okay,
out and send it. So the next session we can go with continuation entries and then I'll go deeper into mitigation blocks and breaker blocks.
okay.
So are we clear with that?
Yeah, yeah, yeah. Thank you so much, bro.
All right. So I'll be rounding up here now.
Uh, thank you.
All right. Have a nice day ahead.
Yeah, you too, boss.